Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. And in our top business story, the Abu Dhabi Department of Finance and UAE Central Bank on Sunday signed two separate agreements with Dubai government to refinance a total of $20 billion in loans and bonds. While the government of Abu Dhabi has agreed to refinance the $10 billion loan, the UAE Central Bank has also signed an agreement to extend the tenure of a $10 billion bond issued by Dubai government in 2009. In both cases, the tenure is set at 5 years renewable with a fixed interest rate of 1%. The refinancing comes ahead of its maturity this year. His Highness Sheikh Ahmed bin Saeed Al Maktoum, Chairman of Dubai Civil Aviation Department and Chairman of Dubai Supreme Fiscal Committee, signed for the Dubai government, while Hamad Al Hur Al Suwaidi, Chairman of Abu Dhabi Department of Finance, signed for the Abu Dhabi government, and Khalifa Mohammed Al Kindi, Chairman of the Board of Directors of the UAE Central Bank, signed on behalf of the central bank. The $10 billion debt from the central bank was in the form of bonds and was due to mature this month. The previous bonds carried a 4% coupon, while the refinancing has been done at a fixed rate of 1%. The other $10 billion loans provided through National Bank of Abu Dhabi and Al Hilal Bank was due to mature later this year. The widely anticipated debt rollover agreements come at a time when the Dubai economy, led by trade, tourism and property sectors, have made major recoveries in recent months. The rollover is expected to enable Dubai to continue to spend on infrastructure, leading up to the hosting of the Expo in 2020. The 18th edition of the International Trade Show for Onshore and Offshore Oil, Gas and Pharmaceuticals Industries was officially opened today by His Excellency Saeed Mohammed Al Tayar, the Managing Director and CEO of the Dubai Electricity and Water Authority. His Excellency Al Tayar toured the exhibition, which has seen the participation of more than 300 exhibitors from over 25 countries, who have displayed new products and technologies over the three-day event. The exhibition has seen a number of new equipments for oil and gas production, testing and inspection, pipeline and drilling, among others. The event aims to promote trade and business alliances whilst facilitating an exchange of technical expertise, which, according to Al Tayar, will be useful for the energy projects planned.
Projects are going on. We have the solar park. It will be independent power plant. And also we have the expansion of M station. It's EPC contracting. It's about 600 megawatt with the total installed capacity about 2,600 megawatt by 2017. Also, we will have the clean coal project. We just finish and finalize the study with a consultant, and consultant will submit his the second stage of study, and I think inshallah in the coming month we have to proceed for open tender for international contractor.
According to a recent report by Deloitte, $68 billion worth of oil and gas contracts are planned for the GCC in the next 5 years, while 60% of global energy consumption will be supplied by oil and gas by 2040, which will be a 55% rise compared to 2010. It is estimated that 56% of the world's oil reserves and 26% of the natural gas deposits can be found in the Middle East, which has urged a number of international companies to capitalize on the developing industry. Much of the focus had been on engineering to support the region's development needs, where the Chinese firm CNPC aims to increase their presence after they were awarded a $300 million contract for 9 onshore drilling rigs in Abu Dhabi, signed in November 2013 with National Drilling Company, while Energy Systems Engineering was one of the firms that intend to bring sustainable technology which can be used for eliminating nitrogen oxide emissions.
This is our first time in Arabic oil and gas show. For Bamako, we are the specialized manufacturer located in China. We have provided about 200 drilling rigs worldwide and about another 200 located in the Middle East. We have provided 11 rigs to National Trading Company Abu Dhabi. So we want to work more closely with the customer in Middle East.
What we are expecting is that we want to bring the latest technology from United States to this part of the world in enhanced oil recovery, in terms of producing steam from a solar, and also providing technology in OTSGs in terms of steam generation, reducing the emissions. We have so much sunlight available because we are so close to the equinox. So this is, I think, a very valuable thing for this part of the world, especially for heavy oil, because you need to have steam, and only way you're going to have a steam is that you have to burn a lot of energy or get something in terms of solar. Solar has, in this part of the world, approximately 850 watts of energy per square meter. So using that efficiently and effectively would actually reduce your emission and increase your productivity.
Equity and currency markets opened the week on the back foot as ongoing developments from Ukraine continued to weigh heavily on risk sentiments, with the uncertainty keeping the US dollar and gold on the front foot. The euro hit a 5-month high against the greenback at 1.39, but retraced on profit-taking and deteriorating risk appetite. Additionally, gold hit a 7-month high at 1,392 as the risk mood favoured the precious metal. To talk more about this, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East, to find out more.
Well, we've seen markets naturally kickstart the week on the back foot, with risk appetites diminishing as a result of the developments coming out of Crimea. Now, what we did see was that the referendum did, of course, go ahead in yesterday as planned, and overall the vote has been towards annexing towards Russia. Now, of course, as a result of this action, we've seen the US and the EU propose to impose heavy sanctions on the Russian government. And as a result, this type of uncertainty is what is leading markets to trade lower. On the flip side, we've seen safe haven assets like the Swiss franc also appreciating. The USD CHF has moved higher. The USD and Japanese yen have also moved higher as a result of this. Gold opened at a gap. It had a high of 1390 levels, and we're seeing it slightly weaker as a result of profit taking. But overall, these developments will continue to be positive for the US dollar as well as gold. We expect, of course, gold now, once it broke that 1380 upper resistance to make a high of 1390, we're expecting a run towards 1430 in the days and weeks ahead. Also on the economic calendar will be the FOMC rate decision due out on Wednesday at 11 p.m. Dubai time. Of course, we're expecting the FOMC to announce a further 10 billion cut to their quantitative easing programs, which will bring it down to 55 billion a month. That's pretty much a given, but more interestingly, we'll be watching for the comments coming out of the FOMC with regards to their plans of forward guidance. Now, that unemployment rate in the US is ticking down to that magical 6.5% number, so we're really going to need to scrutinize what their views are with regards to the interest rates, with regards to the forward guidance of the US economy. So that will lead to a lot of volatility, but overall we like the prospects for the US dollar in the week ahead as a result of this risk-off trade. We expect the comments to be slightly on the hawkish side from the FOMC, and this should also support the US dollar in the week ahead. So once again, we'll look at resistance for euro at 1.40 in the euro USD. Overall, the US dollar will make some gains, and gold looks good to test 1430 levels in the week ahead.